Hello, it's Dylan Simon with the Simon Anderson team in Seattle, and welcome to our August 2026 apartment market recap.
Hi, I'm JD Fuller. Together, Dylan and I specialize in selling 50-unit to 200-unit apartment buildings and apartment development land throughout the Puget Sound.
This was one of the biggest months in institutional capital in the Puget Sound apartment market in years. So today we're covering who's buying, why they're buying now, and the fundamentals behind it all.
The headline, Bentall Green Oak just invested nearly $500 million to recapitalize two brand new Holland Partner Group buildings in Seattle. The Air, a 454-unit tower in Denny Triangle, and the Ballard Independent at $152 million, or nearly $640,000 per unit.
And while that recap wasn't broadly marketed, plenty of deals were. In just the past few weeks, Mesro paid $157 million in Mercer Island. Pacific Urban bought Acapella in Lynnwood from Widener for $112 million, and Security Properties picked up Longar in Issaquah for $55 million.
That's institutional capital committing in city, on the east side, and up north, all in the same 30 days. So why is all this capital showing up now? Dylan, the Business Journal asked you that exact question this week.
They did. Institutional capital flows were slow at the start of the year, but they're picking up steam on the heels of strong office leasing we've seen in the first half of the year, which, if you caught last month's video, is exactly the story we were telling you. The other driver, capital just watched Bay Area apartment market experience momentous apartment growth, and investors want to plant flags here in Seattle in anticipation of that same growth here.
In other words, office workers are coming back, tech is hiring, and Seattle looks like the next market to run. Institutions are positioning ahead of it. And our second quarter research backs up this thesis. Vacancy dropped to 6.7%, down from 7%, and rents are back on the rise.
Meanwhile, new deliveries are down 53% from just last year, and renter demand has outpaced new supply by more than 2,000 units so far this year.
And that supply picture only gets tighter. Very little new construction is breaking ground, so the buildings delivering today are competing for renters in a shrinking pipeline. Our annual development report comes out later this month, and it paints that exact picture. Less supply, growing demand is a rent growth setup, and buyers see it.
The takeaway? Buyers aren't waiting on the Fed anymore. They're underwriting fundamentals, and they're moving now. We're seeing the same depth of demand in our own listings across the region.
Now is the time to capitalize on the wave of demand. Please reach out to us for evaluation of your apartment building or portfolio. See you next month.